Hi, good morning. My name is Holly Seibert, and I'm actually the product manager for the Performance Elite series that we're going to discuss today. We're going to talk about Performance Elite being our accumulation and legacy story. So our Performance Elite offers great growth plus liquidity, and that's how we get our Performance Elite. With our Performance Elite product, we have a 7, 10, and 15-year version. The 7-year version actually launched in June of this year, so fairly new product. And we've made some awesome enhancements to the product here in the past 2 months. But with this product, it's one of our industry-leading accumulation products. Performance Elite has raised the bar with index and rate enhancements that truly deliver exceptional accumulation potential. We do offer a 7, 10, and 15-year duration, and it's one of the industry's strongest optional liquidity riders on the plus version of the product. Performance Elite products offer accumulation and liquidity features that are truly second to none. With Performance Elite, we've got quite the variety of premium bonuses. So this is a product that does offer a strong premium bonus in most cases. On our Performance Elite 7-year product, the premium bonus is going to be 0 for that base version. And then for the plus version of the product, you've got either 5 or 4% premium bonus depending on what state you're doing business in. So always check our rate cards. You can see that there's different variations of the 10-year product, which we'll go into here shortly. California does have a different premium bonus. And then you have a 15-year variation as well that offers a strong premium bonus as well. With the Performance Elite, we've actually just enhanced some features by providing more strategies. So we have your basic S&P annual point-to-point and monthly cap. And we've incorporated the 1-year BNP and 1-year Morningstar. Up until this point, we've only offered the 2-year. We announced this change on Monday. So if you missed that announcement, we do have the 1-year Morningstar and 1-year BNP available, as well as a new index called the SocGen index, and that comes in a 1-year and a 2-year option. So some really great strong rates, great performance. These rates speak for themselves, so be sure to check them out and run an illustration. The vol control indexes give clients a choice of several uncapped interest crediting methods as well. The 1-year strategy uses a participation rate. The 2-year strategy, depending on the index, is either a participation rate or an annual spread with a participation rate that's currently set to 100%, and that's guaranteed at issue. So be sure and check out these rates whenever you're looking for an accumulation play. Our illustration software is pretty savvy for those that haven't had a chance to use it. You're able to see the different annual returns for each of these indexes. So be sure and check that out. In talking about our unique interest crediting strategies, as I was saying, we have the 1-year and 2-year SocGen Janus available now. Again, that became available on Monday, so the 14th. We also have the 1-year and 2-year BNP. The 1-year is going to be a new strategy. Same for Morningstar. Morningstar, up until Monday, we only had a 2-year version. So now we have a 1-year version as well. These are great strategies to take a look at if you're looking for an accumulation play. To talk briefly about our new index, this is the Janus SocGen Market Consensus Index. We're really excited about this index here at Athene. This is unique just to Athene, and this particular strategy has a great wisdom of a crowd piece where clients, I think, will really understand the way that this one could potentially work. It's not as detailed, so you've got world-class investment professionals that are going to be watching this index for us. It's a strong idea. Great client relationships are available. It's incorporated in retail banking, international retail banking, and corporate and investment banking. So really great story behind SocGen. We have great materials available on the website on our Athene Connect website. So I will move on to some of these pieces. If something stands out to you, chances are it is a piece that we are using on the website. So this is one of our sales concepts. It's the how it works. So basically, with the SocGen index, you've got the market consensus strategy, which with that, the market consensus filter is designed by Janice Henderson, and that embeds a low volatility filter. So this is a 3 rules-based or expert strategies to determine the composition of the index and pursue performance objectives. A rules-based approach is data-driven and does not rely on emotion or hunches. So this is a really great strategy in terms of looking at actual returns. With the market consensus strategy, you've got a 3-step process. The first step is you select 250 large-cap U.S. companies. Every quarter, the market consensus strategy identifies the 500 largest market capitalizations in the United States. From these, it selects the 250 stocks with the lowest 3-month volatility. Then you determine the market consensus score for each stock. Every month, the strategy calculates the potential return of each of the 250 selected stocks based on the average of the 12-month price targets of a panel of analysts. The dividends paid over those previous 12 months, the market price of the stock, and the strategy then divides the potential return of each stock by its historical 3-month volatility to determine its market consensus score. Negative scores are set to 0. The third and final step is to allocate. We allocate each stock to the index by weight. The strategy computes the weight of each stock by dividing its market consensus score by the sum of the scores to all 250 stocks. Generally, the stock with the highest potential return and lowest historical volatility would receive the highest weight. And then you've got our volatility control mechanism. Generally speaking, the greater a stock's volatility, the more risk it presents. The volatility control strategy aims to stabilize returns to better manage risk. On a daily basis, it responds to a short-term volatility by adjusting exposure to the core strategy. The index seeks to maintain a 20% daily volatility target, and when that volatility target falls below the target that we set it at, exposure to the core strategy actually increases. When volatility rises above the target, exposure will decrease. Returns are an important measure of index performance, but when you're considering interest crediting strategies and a fixed indexed annuity, the rate of participation in any positive index return is also critical. The Janus SocGen Market Consensus Index uses a performance control strategy to balance these 2 imperatives. The strategy limits the potential positive performance of the volatility controlled strategy to 4% per month with no limit on downside returns. This allows for a higher participation rate than might otherwise be possible. A higher rate increases the amount of any interest credited to your Athene annuity. This is our hypothetical historical example. As you can see, you've got SocGen itself is the black line, and then you've got the S&P is going to be the gray line. This index is new, so you can see at the very end where there's a little bit of red, that's going to be where this actual index comes into play. On top of SocGen, you've got BMP and Morningstar, 2 strategies that we already have. With the BMP, you now have the 1-year option available. BMP has a presence in 75 countries, including all the main international financial markets, and BNP Paribas can boast one of the most extensional banking networks. The Bank for a Changing World places innovation at the heart of its strategy and its culture in its businesses. And then the BNP also ranks the world's 11th most valuable banking brand. Morningstar, again, you have another new one-year strategy available here. With the Morningstar, it's a leading provider of independent investment research in North America, Europe, Australia, and Asia. Provides data to more than 500,000 investment offerings. And Investment Week actually recognized Morningstar through leadership work at its 2015 Investment Marketing and Innovation Awards. The BMP has 3 diverse components as well. So you've got your diverse components, your daily volatility control, and your dynamic allocation. The way that this one works, BMP is 8 underlying components in this indice. You've got 3 equity futures indices, 3 bond futures, and then 2 commodity indices. These components were selected based on the following principles: diversity in geographic zones covered, use of market benchmarks, components representing multiple asset classes. On a daily basis, this index will automatically rebalance the weightings of these components to create a portfolio with the highest past returns. And here's how it works. So step 1, the BMP MAD 5 index actually begins by creating a universe of potential hypothetical portfolios where the underlying components are differently weighed across the board. The second step is that the BMP MAD 5 then tests the different portfolio combinations in the universe, considering only those that have demonstrated long-term realized volatility below a certain level of volatility. And then step 3, out of those remaining portfolios after the second step, the final hypothetical portfolio is then chosen based on the BMP MAD 5 index rules and a methodology which actually allocates more to recent outperformers and less to recent underperformers. This process happens actually on a daily basis, so if the realized volatility exceeds the 5% target volatility on any day, the BMP MAD 5 index will reduce the weight of that hypothetical selected portfolio and rebalance it with a non-cash component. Again, this is just another example of how it moves on a daily basis with the portfolio exceeding what the target volatility is on that day. Then the index will actually reduce the weight of the portfolio and rebalance with that non-cash component. Here's a piece that actually shows past performance. This is one of our pieces that is actually orderable. It's our plan for performance piece. So if you're interested in this piece, be sure and check that out. The charts and tables here actually show an analysis of the levels of BMP MAD 5. This actually went live on January 15th of 2016, and the prior performance shown is a hypothetical of how it would have returned in the market. Morningstar, here's your Morningstar piece. Morningstar, again, we have a one-year strategy available here. Morningstar, the reason the dividends work is no mystery. Dividends are typically an indication that a company has arrived and that its business is well established, financial, healthy, and both willing and able to return cash to shareholders. Dividends also impose a much-needed discipline in corporate executives and directors. So this isn't something that's actually taking it on a whim. This is a very financially healthy and well-established index to be using. With Morningstar, this is a historical of what this one looks like as well compared to the S&P 500. And now we'll get into some rates. So with our Performance Elite 7 and our Performance Elite 10 and 15, as you can see here, with the new strategies that we have, you can see how strong the performance actually is on BMP and Morningstar for this one. And then if we move over to the PE7 itself, you can see that even with the 85% par rate, the average return on that new SocGen Janus Market Consensus Index that we have, it performs quite well. So again, I would take the time to look at an illustration. These are current hypothetical rates, or these are current rates, but here's the hypotheticals of how they performed in the best, average, and worst case scenario. And here you have the 10 and the 15. So strong returns across the board. really with any of our indexes, whether you're looking for the average return or if you want to see the very worst. These are all really strong stories to take a look at. When you're talking about Performance Elite has a base and a plus version of the product. The base version of the product is going to be RMD friendly within the first year. If your client is looking to take free withdrawals, it has 5% free withdrawals in contract year 2 plus, and that's for the 10 and the 15-year version of the contract. If you go with the 7-year version, the 7-year product has 10% free withdrawals starting immediately. And then there's the plus version of this product that has 10% free withdrawals available immediately, 20% rollover withdrawals. So if your client doesn't take any withdrawals in the first year, the second year they'll have access to 20% of free withdrawals. It won't ever go over 20%, but 20% will be available to them if no withdrawals are taken the previous year. And with the plus version, you've got a return of premium feature. After contract year 4, your client is able to get the premium that they put into the product back minus any withdrawals they've already taken. The plus version of the product is for a 95 annual basis point fee. So a really small fee for peace of mind to have a little bit more liquidity and a higher premium bonus on the plus version of the product. So again, the Performance Elite Plus charge or Plus rider charge is 95 basis points annually. That'll be deducted from the annuity's accumulated value during the withdrawal charge period, and the rider cannot be terminated during the withdrawal charge period. Here's an example of our enhanced liquidity feature in the Performance Elite Plus. So you get the 10% of the accumulated value available in year 1 free of charge with the plus version. If the client has not taken a withdrawal in the previous year, 20% of the accumulated value will be available free of charge. And here's how it works. If no withdrawal is taken in year 1, the client can take up to 20% of the accumulated value in the second contract, as shown on this slide. If 5% is taken in the third year, then only 10% will be available in the 4th contract year. So it's 20% rollover if there is no withdrawal taken in the previous year. And here you have an example of our return of premium feature. After the 4th contract year, the cash surrender value will never be less than the premium minus premium taxes, if applicable, and prior withdrawals, including withdrawal charges, premium bonus vesting adjustment, and market value adjustment on those withdrawals. This simplified example shows a $100,000 premium with a request for full surrender after the 4th contract year. The client had previous withdrawals of $11,500, which includes withdrawal charges, market value adjustments, and a premium bonus vesting adjustment. Here's our comparison between our Performance Elite 7 and our Performance Elite 7 Plus. On the Performance Elite 7, as you can see, there's no premium bonus in the first year. On the Performance Elite 7 Plus, for that 95 annual basis point fee, your client will receive either a 4 or 5% premium bonus, depending on what state you're doing business in. There are confinement and terminal illness waivers available on this product. Check your state availability. These waivers are not available in California, and the confinement waiver is not available in Massachusetts. Your client will have free withdrawals on the 7-year product, 10% free withdrawals available immediately, and RMDs. All of our products are RMD friendly, so if your client needs to take an RMD in the first year, they will not be penalized. If your client wants some more enhanced liquidity options, they would have access to 20% free withdrawals in that second year if no withdrawals are taken in the previous year, if they do the Performance Elite 7 Plus. And there's a return of premium feature with that plus version of the product, as well as enhanced annuitization options. Here's the side-by-side for the 10 and the 15-year product. The 10 and the 15-year product, you'll get a premium bonus on the base version of the product. You'll get an enhanced premium bonus, so a higher premium bonus if you do the plus version of this product. Again, that's for the 95 annual basis point fee. You've got your confinement and your terminal illness waivers available as well. State variations will apply. Free withdrawals are available on the base version of the contract starting contract year 2. So they'll have 5% free withdrawals starting contract year 2, or if they need to take an RMD, again, all of our products are RMD friendly if they need to take an RMD in the first year. The enhanced withdrawal feature on the plus version of the product, your client will have 10% free withdrawals starting contract year 1, 20% if no withdrawals were taken the previous year. And again, you've got that enhanced liquidity feature with the return of premium after the 4th contract year for the plus version of the product and the enhanced annuitization option as well. So just to recap, you've got a great premium bonus product on the 10 and 15-year versions and on the 7+ version. It's market-leading crediting strategies with our new indexes, and then powerful liquidity features as well on the plus version of the product. I'd like to talk about the state availability charts just to go back on this a little bit. So Performance Elite 7, we're currently available in all states with the exception of Delaware and New York. California only has the base version of the contract, so all of the states that are in red have both the 7 and the 7+ available. And here's your state availability chart as well. Keep in mind, on the 7-year contract, you've got $10,000 minimum premium in every state with the exception of Texas. Texas is $25,000 for the Performance Elite 7. That's a great feature because this product used to be $25,000 across the board, now only being $10,000. It's a little bit more friendly for folks that don't have the big premiums to put into this product. And again, please note the premium bonuses on the plus version of the product, whether, depending on what state you're in, it's going to be 4 or 5% for that plus version on the 7-year contract. For our 10-year contract, you can see it's available everywhere but New York. There is a variation available. So there's some states that are only select states which offer a lower premium bonus than the regular Performance Elite 10. But it's still a strong accumulation play and offers a premium bonus for those states. Be sure and check out our state availability grid, especially if you're in a state that has the base version and then the select version available. As you can see, like for Utah, for example, you've got the Performance Elite regular 10-year contract available years 0 to 52. Once your client is 53 to 78, they need the select version of this product. As you can see here, premium bonus on the 10-year contract, you've got 4% for the Performance Elite 10. You've got the 10 Pro, which is 2%. For your select states, you've got a different premium bonus there as well. So be sure to take a look at our state availability grid to see more of that. And then Performance Elite 15, you've got I'll go back, I'm sorry. For the Performance Elite 10, it is a $10,000 minimum premium as well. There are some state variations that allow $5,000 minimum premium. Again, go look at our new sales materials online to see which states allow $5,000 rather than the $10,000 minimum premium. On your Performance Elite 15 product, here's our state availability for this product. Again, you've got just different ages that it's available to. Your dark blue states will be issued up to age 73. The light blue states will issue until age 50. And there are a couple states that this product will only issue until age 47. And with the Performance Elite 15, the base version of that contract, you've got a 7% premium bonus. The plus version has a 12% premium bonus. So this is a really strong product, again, for accumulation and legacy. If you're looking for an accumulation play that offers a premium bonus, all of the Performance Elite products offer a premium bonus with the exception of the base contract of the Performance Elite 7. Performance Elite 7 Plus all of the Performance Elite 10 series and all of the Performance Elite 15 products also offer a premium bonus. This product offers great liquidity, great features for folks that want some peace of mind to have the liquidity features available to them. If you have more questions, or if you want to see an illustration on one of your clients, need the new sales kits or the new application since we recently launched the $10,000 minimum premium, please call our sales desk. They're super helpful. Their phone number, I will leave it up on the screen for you, and we will be sure to reach out to folks that were on the phone call today and send out the replay if you'd like. Thank you for your time, and I hope that you have a wonderful day.